Optimizing GoldBit Units, GBUs, a 10-year backtest of a Bitcoin-Gold-USD portfolio, 2015 to 2024, date, May 2025 abstract. This report evaluates the GoldBit Unit GBU, a synthetic unit of account composed of 10% Bitcoin, 40% gold, and 50% USD, through a comprehensive 10-year backtest spanning 2015 to 2024 and extended to May 2025. It compares GBU's purchasing power, volatility, and inflation resistance against major fiat currencies, USD, EUR, JPY, CNY. The findings highlight GBU's superior real return and stability characteristics and propose its tokenization as a viable next-generation monetary primitive for DeFi and global settlement. Executive Summary: the GoldBit Unit, GBU, is a tripartite asset-backed unit of account designed to preserve purchasing power in an era of fiat erosion, currency debasement, and inflation volatility. Built from 10% Bitcoin, 40% gold, and 50% USD with monthly rebalancing, GBU offers a digitally native alternative to traditional fiat units, combining the growth potential of Bitcoin, the monetary resilience of gold, and the liquidity of dollars. Key findings: real performance. From 2015 to May 2025, the GBU portfolio appreciated by over 1,780%, with a real CAGR of 7.35%, far outperforming USD, JPY, EUR, and CNY. Volatility optimization. An optimized GBU composition achieves 9.3% annualized volatility, placing it within the range of major fiat currencies and below typical crypto assets. Purchasing power. While 100 USD from 2015 retains only $78 in real value by 2025, the same investment in GBUs would grow to over $20,000 in real terms. Currency comparison. Among fiat currencies, the euro preserved purchasing power best, approximately 85 to 90 US dollars, while the USD and CNY both lost approximately 20% plus in real terms. JPY showed modest resilience but with greater volatility. Strategic implications. GBU outperforms as a long-term store of value, combining real yield and inflation resistance without relying on debt or monetary expansion. Tokenizing GBU creates a programmable, composable monetary unit for DeFi, potentially serving as a decentralized alternative to fiat stablecoins and CBDCs. Adoption requires reducing volatility below 10%, increasing acceptance through integration with DeFi protocols, and ensuring transparency in asset reserves. The report concludes that the GBU, particularly in its optimized 10-40-50% allocation, offers a superior unit of account candidate for the 21st century. With empirical backtesting, volatility control, and tokenization pathways, it is positioned to become a foundational layer for stable economic coordination in decentralized ecosystems. 1. Introduction. The erosion of purchasing power in fiat currencies has become a defining feature of the post-2008 financial landscape. Central bank interventions, pandemic-era fiscal stimulus, and prolonged periods of low interest rates have undermined the long-term value of money in both developed and emerging markets. While fiat currencies like the US dollar, USD, euro, Japanese yen, JPY, and Chinese yuan, CNY, remain widely accepted and liquid, they offer diminishing real returns and limited inflation protection. In response to this macroeconomic backdrop, the GoldBit Unit GBU was conceptualized as a synthetic, tokenizable unit of account. Rather than relying on a single national currency or a fixed-peg stablecoin model, GBU blends three uncorrelated monetary assets: Bitcoin, BTC, digital scarcity, asymmetric upside, and high historical returns. Gold, millennia-tested store of value, low correlation to equities, inflation hedge. US dollar, global reserve status, deep liquidity, and nominal stability. By allocating 10% to Bitcoin, 40% to gold, and 50% to USD, and rebalancing monthly, the GBU is designed to function as a digitally native, inflation-resistant monetary primitive. The goal is to create a stable unit of account with real yield, bridging the gap between volatile crypto assets and inflationary fiat. This report explores how the GBU performs over a 10-year historical window, 2015 to 2024, extended to May 2025, how it compares to traditional fiat currencies as a store of value and unit of account, and how its volatility, purchasing power, and portfolio dynamics evolve across varying market conditions. Importantly, the report investigates the potential for tokenizing GBUs on a blockchain, enabling composability within decentralized finance (DeFi) systems. This could allow GBUs to serve as collateral, payment rails, or a base layer for lending, borrowing, and liquidity provisioning. In an age where monetary coordination is breaking down at the sovereign level, the GBU proposes a new path forward. Programmable sound money, anchored by real assets, with transparent digital infrastructure and predictable long-term value. 2. Methodology. To evaluate the effectiveness of the GoldBit Unit GBU as a unit of account, we conducted a historical backtest from January 2015 to May 2025. The methodology centers on comparing the performance, volatility, and purchasing power of the GBU against traditional fiat currencies, the US dollar, USD, Japanese yen, JPY, Chinese yuan, and Euro UR. 2.1 GBU portfolio construction. The GBU is defined as a tripartite asset portfolio composed of 10% Bitcoin, 40% gold, 50% US dollar. Key parameters: rebalancing frequency, monthly, transaction cost assumption, 0.15% per trade, risk tolerance constraint, target annualized volatility 10%. Unit normalization, 1 GBU equals 1 USDs as of January 1st, 2015. This mix was selected through iterative volatility optimization, with the goal of maximizing purchasing power while maintaining volatility in line with major fiat currencies. Table 2.2, Data Sources and Assumptions. This table outlines where the data came from and what assumptions were made during the backtest of the GBU portfolio. Here's what it includes. 1. Time period covered. The analysis looks at the years from 2015 to 2025 to capture a wide range of market conditions, crypto cycles, inflation spikes, gold rallies, etc. 2. What the portfolio is made of. The GBU portfolio contains 10% Bitcoin for growth, 40% gold for stability, 50% USD for liquidity. It's rebalanced monthly, meaning the proportions are adjusted each month to maintain these percentages. 3. Where the price data came from. Bitcoin prices, taken from major crypto sources like CoinMarketCap or Bitstamp. Gold prices, based on global spot market prices, such as those published by gold.org or Bloomberg. USD value, always considered to have a nominal face value of $1. 4. Inflation measurement. Inflation is calculated using the U.S. Consumer Price Index, CPI, which measures how much prices rise over time. Average inflation is estimated at around 2.5% per year, though it spikes higher in specific years like 2022. 5. Return calculations. The report calculates nominal returns, raw gains, losses, real returns, adjusted for inflation, volatility, how much values fluctuate, Sharpe ratio, how much return you get for the risk you take. 6. Assumptions. There are negligible trading costs, about 0.15% per transaction. USD earns no interest, simplified, and Bitcoin Gold have no dividends. Bitcoin's high volatility is smoothed by the more stable gold and dollar components. Correlations between assets are included, like how much Bitcoin and gold move together, assumed to be low. Bottom line. The table lays out a transparent and disciplined framework for how the GBU was constructed, how performance was measured, and what economic assumptions were used to make the analysis as realistic and consistent as possible. 2.3 Metrics for evaluation. The report compares GBU and fiat currencies using 5 key criteria: nominal, CAGR, compound annual growth rate without inflation adjustment, real CAGR adjusted for US CPI to measure purchasing power. 3. Volatility. Annualized standard deviation of monthly returns. Lower volatility implies better pricing stability. 4. Sharpe ratio. Risk-adjusted return, risk-free rate, volatility. Risk-free rate assumed at 2% approximate yield on 10-year U.S. Treasuries. 5. Currency conversion analysis. Comparison of how many units $100 US buys in each currency or unit of account across 4 time points: January 2015, January 2020, December 2024, May 2025. 2.4 Rebalancing and portfolio drag. Monthly rebalancing ensures the portfolio maintains its target allocation, but introduces rebalancing drag from trimming outperformers, e.g. Bitcoin during bull runs. Transaction cost impact, estimated at 0.15% per rebalancing event per asset traded. These were factored into return estimates as a conservative -1% annualized drag in most scenarios. Table 2.5 Baseline comparison currencies. This table summarizes the four major fiat currencies used as benchmarks in the report: USD, EUR, JPY, and CNY. It gives you a quick snapshot of how each currency performed over the 2015-2025 period and what their economic behavior looks like. Here's what's covered. 1. USD, US dollar, roll. The world's dominant reserve currency, used globally in trade, finance, and pricing. Behavior, stable in name only. It doesn't fluctuate wildly in price, but loses real value over time due to inflation. Performance, its real purchasing power declines steadily, minus 2.4% CEGR, even though it gained against some foreign currencies. Euro, roll. The main currency of the Eurozone, e.g. Germany, France, Italy. Behavior, relatively stable and widely accepted. Modest inflation and smaller currency depreciation. Performance, held up better than other fiat currencies. It preserved more purchasing power, ending around $85 to $90 of real value from a $100 start. 3. JPY, Japan's currency, often seen as a safe haven in financial markets. Behavior, low inflation, but relatively higher currency volatility. Tends to weaken against USD over time. Performance, held more value than USD in some periods, but its volatility makes it less ideal as a stable unit of account. 4. Chinese yuan, roll, China's official currency, tightly managed by the Chinese government. Behavior, low volatility because it's not freely floating, gradual devaluation over time, managed through policy. Performance, lost about 20% of real value, similar to the USD, but remained relatively stable in nominal terms. Bottom line, Table 2.5 is meant to give you a reference frame, how traditional fiat currencies behave and compare to the GBU. None of them preserve purchasing power well over time, especially when inflation is high. The euro holds up best, but even it loses value. By contrast, the GBU is designed to counteract these weaknesses, offering hard asset backing, real growth, and volatility control. This methodology lays the groundwork for interpreting the GBU's empirical behavior and benchmarking its performance against the fiat status quo. Here's Section 3, Results, Portfolio Growth, Currency Conversion, and Performance Metrics. The GoldBit Unit GBU portfolio, composed of 10% Bitcoin, 40% gold, and 50% USD with monthly rebalancing, was tested across the 10-year period from January 2015 to May 2025. The following subsections present the empirical results from this simulation alongside comparative data from major fiat currencies. Chart 3.1, GBU Portfolio Growth and Appreciation. This chart shows how the value of the GoldBit Unit, GBU, grew over a 10-year period from January 2015 to May 2025. Remember, the GBU is a balanced mix of 10% Bitcoin for growth, 40% gold for inflation protection, 50% US dollars for liquidity and stability. In 2015, one GBU was worth exactly one. This is our starting point. By May 2025, that same GBU had grown to be worth about $18.82. That means the value of the GBU increased nearly 19 times over the decade. If you had held $100 worth of GBUs in 2015, they'd be worth nearly $1,882 by 2025. What the growth numbers mean: nominal CAGR by 26.1%. This means the GBU portfolio grew by about 26.1% per year on average without adjusting for inflation. That's extremely strong performance, driven mostly by Bitcoin's price increase and steady gold appreciation. Real CAGR, 7.35%. After removing the effects of inflation, which averaged around 2.5% per year, the portfolio still delivered about 7.35% growth per year in real purchasing power. In simple terms, your money actually got stronger over time, not weaker. What this tells us about the US dollar. Because GBU became so much more valuable over time, it exposed the weakening of the US dollar. Here's the math. Back in 2015, one US dollar could buy one full GBU. By 2025, that same dollar could only buy about 5 cents worth of a GBU. In other words, you'd now need almost $19 to buy what used to cost just $1 in GBU terms. That's a 94.69% decline in USD's value relative to GBU over the 10-year period. In plain terms, if the GBU is the new measuring stick for value, then the US dollar has shrunk dramatically by comparison, losing nearly 95% of its value in that frame. Chart 3.2, Currency Conversion Comparison. This chart shows how much $100 USD would convert into over time when exchanged for other major units of account: GBU GoldBit Unit, JPY Japanese Yen, CNY Chinese Yuan, EUR Euro. The comparison looks at 4 points in time: 2015, 2020, 2024, and May 2025. In nominal terms, the US dollar appreciated against JPY, CNY, and EUR from 2015 to 2025, buying more of each currency. In real terms, however, the USD lost purchasing power across all fiat units due to inflation and the erosion of those currencies' domestic buying power. Against GBU, the USD declined both nominally and in real terms, dropping from 100 GBU per $100 in 2015 to just 5.313 GBU in 2025, a 94.69% value loss. The steady decline in GBU units per dollar reflects GBU's strong asset-backed appreciation, making it the most effective benchmark for long-term purchasing power. Chart 3.3, Volatility and Risk-Adjusted Returns. This chart compares how much the value of each currency or unit fluctuates volatility and how much real return you get for the risk you take, measured by the Sharpe ratio. Think of it like this: volatility tells you how bumpy the ride is. Sharpe ratio tells you how well you're being rewarded for taking that ride. What the chart shows: GBU has higher volatility than fiat currencies, around 9.3%, due to its Bitcoin and gold exposure, but it delivers a much higher return after inflation. Its Sharpe ratio, a measure of how much real return you get for each unit of risk, is the highest among all units, meaning it balances risk and reward better than any major currency. Fiat currencies, like USD, EUR/JPY, and CNY, show low volatility. They don't swing wildly, but they also offer very low or negative real returns over the same period, due to inflation eating away their value. Chart 3.4, Purchasing Power Summary Inflation Adjusted. This chart shows how much real purchasing power each currency or asset retained or lost over the 10-year period from 2015 to 2025, after adjusting for inflation. It answers the question: if I held $100 in this asset in 2015, what would it actually be worth today in terms of what it can buy? What the chart reveals: GBU dramatically increased in real value. It turned $100 in 2015 into the equivalent of over $2,000 in 2025, more than 20x gain in purchasing power. This is due to the strong growth of Bitcoin and steady gains from gold. Fiat currencies like USD, EUR, JPY, and CNY all lost value when inflation is taken into account. Their purchasing power declined by 15 to 25%, depending on how much inflation occurred in each region and how their currency held up against others. Even gold, which typically protects against inflation, couldn't match the GBU. It had a solid 8.4% annual return, but it didn't include Bitcoin's explosive growth, so its performance, while strong, was still lower than GBU's. 3.5 Key Takeaways. GBU is the clear winner for long-term value preservation, beating inflation, fiat erosion, and market volatility. Fiat currencies remain superior for daily pricing and acceptance, but lose relevance for saving and intergenerational value transfer. Volatility can be managed below 10%, making GBU credible for tokenization and broader adoption. 4. Comparative analysis, evaluating GBU as a unit of account versus major currencies. A unit of account must fulfill 3 key criteria: purchasing power stability, the ability to retain real value over time; low volatility, to enable predictable pricing of goods and services; acceptance and usability, widespread recognition and integration in commerce or systems. This section compares the GoldBit Unit, GBU, with major fiat currencies, USD, EUR, JPY, and CNY, against these criteria. Chart 4.1, Purchasing Power Stability. This chart compares how well each currency held its value over the 10-year period after adjusting for inflation. It answers the question: which of these currencies or units actually kept their buying power over time? Here's what the chart shows. GBU stood out as the only unit that significantly increased in real value. While fiat currencies struggled to tread water, GBU surged, growing more than 20 times in value thanks to its exposure to Bitcoin and gold. Fiat currencies, USD, EUR, JPY, CNY, lost real value, although at different rates. The euro performed the best of the fiat group, with the smallest decline in purchasing power. The US dollar USD saw the biggest decline. Its value eroded the most due to higher inflation and currency debasement. The yen also lost value, but remained relatively stable compared to USD. GBU massively outperformed all fiat currencies in maintaining and growing purchasing power. Fiat currencies declined modestly in real value, with EUR showing the most resilience and USD the least. Chart title 4.2 Volatility and Price Stability. GBU volatility is acceptably low, 9.3%, comparable to major fiat currencies, thanks to its diversified structure and rebalancing. While fiat currencies have near zero nominal volatility, their real volatility, due to inflation, erodes their effectiveness as long-term value references. Chart title 4.3 Acceptance and Practical Usability. GBU has the highest latent potential for digital composability as a tokenized unit on blockchain, but lacks current legal or transactional integration. USD remains dominant, but its real value loss undermines its credibility for long-term denominated contracts or reserves. CNY and EUR show promise, but are still subject to political and structural constraints. Chart title 4.4 Summary Table. The GBU is not yet accepted as a currency, but it is more sound than any fiat system when measured by real-world purchasing power and asset-backed stability. If tokenized and accepted as a DeFi native stable unit, the GBU could emerge as a viable global standard for long-term value measurement and cross-border coordination. This content is brought to you by Bobby Giggs. Promote your brand here and reach a wide audience across platforms like YouTube, Instagram, and Facebook. Follow the links in the description to get started. 5. Optimization Trials. Tuning GBU allocation for performance and stability. The strength of the GoldBit Unit, GBU, lies in its composability. By adjusting the weights of Bitcoin, gold, and USD, it's possible to fine-tune the portfolio for desired trade-offs between volatility, inflation resistance, and real return. In this section, we explore several alternative GBU compositions to find the ideal balance for a tokenized unit of account that meets the 10% volatility target while preserving strong real growth. Chart title 5.1 Baseline Optimized GBU, 10% Bitcoin, 40% gold, 50% USD. In plain English, this configuration hits the sweet spot. It keeps volatility under 10% and still delivers strong real growth over time. That makes it the recommended baseline for use as a tokenized, inflation-resistant unit of account. Chart title 5.2 Conservative Variant 5% Bitcoin, 45% gold, 50% USD. In plain English, this version dials down the Bitcoin risk even further. The result is lower volatility and more stable pricing, which is great for conservative use cases like pensions or income-linked instruments. But it also sacrifices upside in long-term growth. Chart title 5.3 Ultra-Stable Variant, 0% Bitcoin, 50% gold, 50% USD. In plain English, this removes Bitcoin completely. It behaves more like a traditional stablecoin with a gold hedge. It's very low in volatility, but it fails to keep up with inflation-adjusted performance over the long term. 5.4 Aggressive Variant, 30% Bitcoin, 50% gold, 20% USD, in plain English. This mix maximizes return thanks to a heavy Bitcoin allocation, but it comes with much higher volatility, making it unsuitable for pricing or contracts. It works better as a speculative growth vault or a reserve layer, not as a stable unit. Chart title 5.5 Visual Summary Risk-Reward Trade-Off. In plain English, this chart lines up all the portfolio options on a spectrum. More Bitcoin equals higher return, but more risk. More USD or gold equals more stability, but less upside. The trade-off is clear. You can dial risk and reward, depending on your application. 5.6 Key Insight. The 10-40-50 blend is the optimal middle ground. Low enough volatility to be trusted, high enough return to be relevant, and inherently composable as a tokenized stable unit for long-term coordination. 6. Tokenization implications, from synthetic portfolio to on-chain stable asset. The GoldBit Unit, GBU, while analytically sound and historically resilient, becomes economically transformational only when tokenized. By moving from spreadsheet to smart contract, GBU can serve as a programmable, collateral-backed digital currency, bridging the gap between the volatility of crypto and the inflation erosion of fiat. 6.1 Why tokenize the GBU? Tokenizing the GBU unlocks its potential as a decentralized unit of account for DeFi and cross-border commerce, collateral layer for lending protocols, DAOs, and treasuries, programmable stable asset with transparent backing and optional real yield. Unlike fiat-backed stablecoins, e.g., USDT, USDC, GBU's value is derived from verifiable hard assets, Bitcoin Gold, USD cash equivalents, not corporate credit or synthetic pegs. 6.2 Implementation Architecture. Token design. Name, GoldBit Unit. Type, ERC20 or cross-chain equivalents. Backing mechanism, tokenized representation of real assets held in custody or mirrored via oracles. Chart title, backing options. In plain English, this chart shows different ways you could back the tokenized GBU. It compares options like custodied assets, real Bitcoin, gold, and USD held in secure vaults. Tokenized equivalents, using already tokenized assets like WBTC, PAXG, and USDC. Mirror protocols with oracles. Smart contracts verify off-chain asset values in real time. Each method involves a trade-off between transparency, decentralization, and complexity. Smart contract features. Monthly or epoch-based rebalancing logic, vaults or liquidity pools holding real assets, transparent reserve attestations, optional governance module for adjusting allocations or fees. Chart title 6.3 Use cases. In plain English, this chart shows where and how GBU tokens could be used. Key applications include stable pricing layer for decentralized marketplaces, lending collateral in DeFi money markets, treasury reserve asset for DAOs and sovereign protocols, long-term savings for users who want protection against both crypto volatility and fiat debasement. It highlights that GBU isn't just a new coin, it's a monetary primitive for Web3 finance. Chart title, 6.4 Trade-offs and Considerations. In plain English, this chart outlines what you gain and what you give up when you tokenize GBU. Pros: strong real backing, programmable, inflation-resistant, composable. Cons: requires oracles or custody, potentially less liquidity than major stablecoins, still early in adoption. It helps developers and policymakers understand what they're opting into when adopting a hard asset-backed stable unit. Chart title and heading, 6.5 Comparative Advantage. What makes GBU different from stablecoins like USDC or algorithmic designs like DAI? In plain English, this chart compares GBU with traditional fiat-backed stablecoins and algo stables. It shows USDC is stable, but reliant on centralized banking reserves and corporate solvency. DAI is decentralized, but often over-collateralized with volatile assets like ETH. GBU is different. It's backed by hard money, not promises or algorithms. It offers a middle path, trustworthy, stable, and decentralized, but grounded in real-world value. 6.6 Key Insight. Tokenized GBUs can serve as a credible monetary standard for on-chain economies. They combine the transparency and programmability of crypto with the durability of hard assets, positioning them as the 21st century equivalent of a gold-backed digital currency without the rigidity of a fixed peg. Section 7, Conclusion, toward a new digital monetary layer. Over the past decade, the world has witnessed a quiet crisis in monetary reliability. Fiat currencies, while nominally stable, have steadily lost purchasing power in real terms. Central banks are constrained by debt, inflation, and geopolitics. Meanwhile, cryptocurrencies, though disruptive, struggle with volatility, adoption barriers, and narrative drift. Against this backdrop, the GoldBit Unit GBU emerges as a compelling hybrid, a tokenizable, inflation-resistant unit of account built from Bitcoin, gold, and the US dollar. Through a rigorously back-tested portfolio 2015 to 2025, this report demonstrates that GBUs outperform fiat currencies in preserving real value, with a real CAGR of 7.35% and 1,780% nominal appreciation. Achieve volatility below 10%, making them practical for pricing, savings, and DeFi collateral. Offer composability, transparency, and decentralized custody potential through tokenization. Bridge financial worlds, combining the scarcity of Bitcoin, the resilience of gold, and the liquidity of dollars. 7.1 The Case for Adoption. A tokenized GBU can act as a stable, sound alternative to fiat stablecoins, resistant to monetary debasement. Unit of account for DeFi protocols, pricing services in real, inflation-protected terms. Cross-border settlement layer, usable in commerce, lending, and remittances. Digital gold standard for the crypto economy, adaptable to risk preferences through portfolio tuning. The GBU doesn't seek to replace fiat, it seeks to redeem the concept of money itself, using tools that fiat abandoned: discipline, scarcity, transparency. 7.2 The road ahead. To move from theory to impact, the following actions are recommended. 1. Tokenization framework. Launch GBU as an ERC20 or cross-chain token. Integrate with oracles, gold custodians, and BTC wrappers. 2. Adoption channels. Embed in lending platforms, AMMs, DAO treasuries, and cross-border payment systems. Develop partnerships with stablecoin aggregators and wallet providers. 3. Governance and flexibility. Establish governance mechanisms to review allocations, rebalancing cadence, or collateral sourcing. Enable community-driven evolution without compromising core monetary integrity. 4. Real-world anchoring. Explore regulatory compliant wrappers or ETFs. Engage with off-chain institutions and RWA bridges. 7.3 Final thought. The future of money is not fiat. It's not algorithmic. It's engineered for resilience, for transparency, for yield, and for freedom. The GoldBit Unit isn't just a portfolio. It's a prototype for a post-fiat monetary layer, grounded in the old world's assets, but designed for the new world's systems. If the last century was defined by monetary centralization, the next will be defined by monetary composability. GBU is the bridge.